Hi, this is Sean Overton with One Step Removed, and today I have Ilan Azbel. Ilan is the CEO of Autochartists. It's an extremely famous research and charting package that's available through most Forex brokers. So, Ilan, thanks for joining me.
Thank you, Sean. Thank you.
I wanted to start out by talking about your personal experience with trading. So, what led you to open your first trading account?
Well, when I was younger, a few years after university, I ran into some money. I was quite fortunate in my life, and like any young guy with a bit of money, it wasn't anything significant, but I wanted to basically start trading. So I started gambling on the markets, basically. Yeah.
And you used the word gambling. Yeah. How did that work out?
Yeah, it wasn't, let's just say I don't look at those times very fondly from a financial perspective. It was
some regrets, some ups.
Yeah, some ups, some downs. Lots of downs. Yeah, more downs than ups, unfortunately. But I guess that's the school fees you pay when you start in the markets.
Yeah, literally everybody I've talked to, that's everybody's first trading experience.
Always, yeah, no doubt.
And then, so you get into trading. What do you do? Like, how did you teach yourself about trading?
Well, I have a background in maths and stats and computer science, and so I took quite an analytical approach. And what I started doing is I started looking at the markets and reading books on technical analysis. And all the books that I had these chapters on these support and resistance levels, and it's something that resonated with me.
Okay.
And then, but there was no tools around to automate them. So using my computer science programming background, I automated the stuff.
So you automated like patterns?
Yeah, automated pattern detection. Yeah, and I started trading on it actually. So that's pretty much how I started. And in fact, that was the birth of Autochartists as well.
You're just a computer science guy at home, and you're like, I want to know where support and resistance is.
Literally in the garage. That is exactly how I started.
Okay.
So, yeah.
So you are a modern tech startup.
Yes.
Or you were.
Yes. Still looking for the $1 billion valuation, but
still a little shy of that.
A little shy, yeah. Yeah.
So what kind of patterns do you actually use when you're trading? You talked about support and resistance.
Well, in my personal trading, and again, I encounter a lot of people who have different styles, but personally, I use a lot of patterns that are based on horizontal levels.
Okay.
So what I don't use, maybe that's easier. What I don't use channels. I don't use triangles. I don't use wedges. I don't trade on anything like that. I trade on ascending and descending triangles, triple bottoms, triple tops, head and shoulders, or just horizontal support and resistance levels. So anything that's got a horizontal level, that's what I trade in.
Okay, so if you find a pattern and you're using Autochartist, I imagine for that, are you looking for confluence between the support and resistance levels, and then where that matches up with a triangle? Is that where you find your edge?
Actually, not quite. I try to avoid looking at things like triangles and these trending type of patterns. So I take a slightly different approach, and what I do is I do a little bit of analysis, and I guess we can talk about it in more detail if you like. I do a bit of analysis of the opportunity when a support or resistance level is identified.
Right.
But then what I try to do is I actually try to open up many positions. So instead of managing my risk by doing more and more research about one opportunity, I do a little bit more research, but a shallow amount of research, but manage my risk through a diversification of investments. So very rarely will you find in my portfolio one position open.
Okay.
I normally have 3 to 7 positions open at any given time. So that's the way I manage my risk.
So do you work yourself into a position? So if you're trading euro-dollar, is there one trade, or is there maybe 5 trades that evolve into one position?
Yeah, that's a good question actually. The honest truth is that it's one trade.
Okay.
But if a further opportunity appears on the same pair and I haven't exited yet, I would enter another position.
Okay.
So it's not like I plan to work myself into a position or work myself out. I trade. I plan that to be the only position. But if something else comes along, I trade.
All right. So that's not the design, but that's the way it works in practice.
That's the way it works in practice. That's right.
We talked a lot about benchmarks beforehand. What do you think about the idea of trying to beat the benchmark as a trading goal?
Again, I have a bit of I'm always contrarian with things. I have a bit of a different view. many professional asset managers and hedge funds, they try to tell you how much they've outperformed the benchmark, which is all good and well in upward markets.
Right.
But when downwards market happens and the benchmark is down 50%, then really it makes no difference to you whether you're down 45 or 50, okay,
right.
because you're down, right? So, so to be completely honest with you, when I trade on my personal portfolio, I am not focused on the benchmark.
Okay.
I'm actually focused on the risk-free rate. So what I try to do for myself is my measure is by how much can I beat the risk-free rate rather than by how much I can beat the benchmark. So yes, there are times when the benchmark, the S&P is flying,
right,
and I'm below the benchmark.
Okay.
But conversely, when the S&P is down some crazy amount of money, I am still aiming to beat the risk-free rate, right? So I'm up. So I aim to smooth my returns out according to the risk-free rate, rather, And I normally aim, let's just say the risk-free rate's around 5%, roughly. I aim to be somewhere in the region of 12 to 15% return per annum.
Okay. And what are your thoughts on? Okay, so you're going for 12 to 15% per year. That's very normal, right?
Yes.
You're not trying to turn $1,000 into $1 million tomorrow.
Right.
What do you think about leverage, especially in Forex? How do you try to use it? Do you just use a small portion of your account to shoot for the moon, or do you treat it as a portfolio and just use a tiny amount of leverage?
Yeah. I think there's two different ways of looking at leverage. I think the first thing, when I'm talking about 12 to 15% per annum growth, that doesn't mean that all my assets in my personal portfolio are making 12 to 15%, right? Property would make 4% or 5%, right? An equity portfolio would make a little bit more than that, right? But I think as part of everybody's portfolio as a whole, one needs to have leverage,
yes,
right? It doesn't mean that you take your entire RA and put it into,
don't do that.
Yeah, don't do that, right? Okay, so I think leverage is good used appropriately. However, the problem really is people think that leverage is a means to make themselves super rich,
right?
And they take a large amount of gearing on their positions, which is not bad, but they take it on an inappropriate amount of money, right? So they overexpose themselves, and they take on more risk than they can actually swallow, right? And what ends up happening a lot, especially I've seen in the retail space, because that's obviously where Autochartists plays, is that retail investors don't have the appetite for anything more than 15 to 20% drawdowns. Well,
yes,
if you don't have an appetite for that, then you shouldn't be gearing yourself up 100 times, right? So you shouldn't, right? So it all looks nice on paper when you look at a strategy, or you look at an algorithm, or you look at something and it says, oh, there's a 50% profit per annum, but only a 20% drawdown. It's good looking at that on paper, but believe me, when you're trying to live through a 20% drawdown, in reality, in cash, it's a very different story. People are running for the hills, right?
Yes.
And then they never end up winning. They just churn from one thing to the next, and they never end up sitting out because it's just too much risk. So my view on leverage is mixed. It's good and it's bad. It's good used appropriately, but very, very bad when you're actually trying to be more than you actually are as a trader.
So is it fair to summarize that your view of an account balance in FX is this is the entire amount that I've dedicated to losing, and so you leverage that really high because that's only a small portion of what you have?
Right. So in fact, a friend of mine came to me the other day and he says, Ilan, I want to try, I want to put in a few $1,000s into FX trading.
Okay.
And I said, well, let me tell you something. Go to your wife and tell her, I'm about to invest this many thousands of dollars, and I'm going to lose it. I want you to know that I'm writing this money off. And that was my hint to him, because when he comes to his wife in 6 months' time or 12 months' time, and
if he goes to his wife,
she knows she's been prepared, right? Like he's lost the money.
Okay.
And I think that's very, very important. I think, however, that is one class of trading FX. I think there's a whole other class of trading FX where I think it's completely reasonable and it's possible to make returns of north of 20 to 25% return per annum with a reasonable amount of risk. Okay? But I think it's unreasonable to expect a 100% return per annum. And I think that's really the problem. The noise in the market is such that people are advertising to you, I'm going to make you 100% a month with 1% drawdown, or just insane propositions, and people buy into it, and then they're disappointed and they lose their money.
Right.
If you aim to a reasonable level, I think it's very achievable.
Okay.
I think the problem is the aim.
And you use the word noise, and you were referencing something else, but I think about the markets as noise, and then there's the real signals. As you go down to lower time frames, the markets are incredibly noisy, and then as you go up in time frame, they get to much more pure information. Where do you think that balance lies between separating real information versus just the day trading chop?
Wow. I think one has to really determine what your own appetite is for your trading. If you're willing to work your day job, whatever you are, a lawyer, an accountant, a doctor, or whatever it is, and you're happy to keep your trading screen open with you the entire day, right, and watch your trading screen going up and down and red and green and having little heart attacks throughout the day, then working, right, or sitting on your cell phone, watching the markets go up and down and wondering whether you can put food on the table that month, so if you're that kind of person and you're willing to do that, then you can go ahead and trade the lower risk stuff, right? Oh, sorry, the lower time frame stuff. But if you're like the rest of us and you have a day job and you're trying to balance family life and home time, because the markets are open 24 hours, and you're a doctor, you're trying to treat your patients with respect, instead of monitoring.
Yes, giving them the attention they deserve.
Right. Then there is, you need to start looking at 1 hour, 4 hour time frames, daily time frames, reducing your leverage. So I know you were expecting a mathematical answer from me, right? But I know, Sean, I know you're expecting, But the truth is that I see it very differently. I see it more of a lifestyle thing.
Okay.
And I think that's very important. And I think sometimes people forget that.
Yeah.
You have a housewife at home who's trying to trade FX, wants to make some money, right? Except, she takes up this massively leveraged position, and then the 1 hour that she has to go and take the kids to school, she's absolutely freaking out in the car because she's got a position open and she doesn't know which way it's going. That's just not the way to live, to be completely honest. So,
okay.
Yeah.
And earlier you mentioned that in Autochartists you only use the patterns associated with flat lines. Do you think levels are important in Forex?
Yeah, I actually trade levels not only in FX, I trade them in my equities portfolio as well. So I'm a strong believer in levels, and not only in levels that are identified by Autochartists. I mean, Autochartists really it's nothing new, right? It's just an automation of a task that everyone does visually, right? So it's not like some new crazy thing that we've come up with.
It's a tool people use.
It's a tool that people use, So over and above the levels that Autochartists identifies, I also look at round numbers. For me, round numbers are a big thing. And yes, I think one just needs to look visually at a price graph to see how there's a lot of activity at certain levels all the time. The trick is obviously how to trade them correctly, but I'm certainly a strong believer in significant levels in the market.
Okay. And then with the math and stats background, what's the balance between just doing research versus algorithmic trading? Do you trade algorithmically?
I trade algorithmically a little bit in the FX market. Most of my trading is screen trading.
Okay.
I trade a little bit algorithmically. I'm getting more and more into it. The challenging bit about algorithmic trading is actually not really finding an algorithm that's profitable, but actually an algorithm that's profitable over a long period of time.
Okay.
And I think you know that. I mean, you're in the game. To find something that works for a month is easy. Right. To find something that works for 3 months is more difficult. To find that something that works for more than 2 years is almost impossible. Right. Yes. And the trick is to keep adapting your algorithms. And I think that's immensely time consuming and immensely involved. You keep on having to tweak things, and then at some point you're tweaking things to such a level where you think, well, it's so complex already, maybe it's time to move on to the next idea, which is more clean, more simple, when you actually understand what's going on internally,
right.
Instead of just all these band-aids just trying to fix a broken system. So I think both screen trading and algo trading have got their positives and their negatives. They've got their challenges.
Right.
Yeah.
Okay. And I find it interesting because you're still doing research. You're still looking at your own algorithms. Do they make their way into Autochartist?
Right. Well, it's a good question, actually. In the next few weeks, I'm not sure when this video is coming out, but in the next few weeks, Autochartist is going to be making some big announcements on the algo trading side.
Okay.
Obviously, we're the company itself. You can imagine is sitting on an immense amount of research.
Yes.
An immense amount of data and analytics, more than what you see on the front end or the UI of Autochartists, right? There's a lot of stuff going on in the background, and so I think moving into algorithmic trading is. It's just a natural progression for the company. So there's going to be a lot of stuff coming out I don't want to kind of say more than that, but there's going to be a lot of stuff coming out in the next few weeks.
Okay, so you're looking at ideas all the time. How do you strike the balance between applying this idea and then throwing this one on the shelf and rotating through them?
Yeah, so I'm quite in an interesting position where I straddle trading as my own portfolio,
okay.
Right, on my own portfolio, and also running Autochartists as a business that provides investors with information, right? And in any given week, I'm approached by 2, 3, 4, 5 individuals, a handful of individuals with new ideas, new concepts of trading, and of course, I want to push not only Autocharts forward, I want to push my own portfolio forward. So I'm constantly being, the demands are constantly such that I need to evaluate these things. And I think that really, I guess the easy question to answer is for Autochartists. With regards to Autochartists, people understand simple concepts,
okay.
Right, in trading. So when a few weeks ago, a very interesting gentleman approached me with some concepts about how to apply some Newtonian mechanics, in trading, and it's really interesting, and the work was really amazing and good, right, of a high quality. And we looked at it from Autochart's perspective and find out whether our clients would be interested in looking at something like this. But the truth is that it was pretty much over everybody's head, okay. Right? So it's
physicists tend to do that.
Right. So who understands physics? Who understands Newtonian mechanics? It's just, and I guess that's really the beauty of Autochartists, right? It gives you a line, gives you an arrow, and it's really simple to understand. Although the mathematics and the stats behind it is quite complex, the resulting product is it's
ultimately a up down arrow, down arrow.
Exactly. Right. And it's easy to understand visually, right? Whereas something in physics, is very obscure and people don't understand it. I don't even want to understand it, right? Yeah. So an idea like that, we pretty much classify as not inappropriate for Autochartist users, right? And then we start looking at it more from a fund perspective or from an algo trading perspective.
Okay.
And then then obviously the filtering process is far more stringent because there's a difference between having an interesting concept to actually being able to trade something effectively. Trading. Many people think that trading is just about getting a signal right, going up and going down. Trading is a lot more than that. It's about portfolio management, asset allocation, money management, risk management. And sometimes the core signal going up and down is simply insufficient to actually make a profit or make something into a valuable algorithm or trading strategy. So there's a number of steps that we would go through as a company and I would go through as an individual to actually figure out whether an idea is actually tradable or not.
Okay, so you're not focused entirely on just the signal making you this amazing equity curve and then you're done and you go home.
Yeah, and I must tell you that is very rare, very rare. Most of the trading strategies are found to be most profitable, and more than that, more importantly for me, maybe not for some of your listeners, but for me, more importantly, is the strategies that are risk managed, appropriately risk managed,
okay.
Right? Are the ones where the emphasis is actually on the exit strategies,
okay,
rather than on the entry strategies. So a lot of effort goes into either how to get in and out of positions, how to check whether your initial assumption of getting into the market is still, whether it still holds or not. So I think that's an absolutely essential part of any strategy, whether automated or manual.
Okay.
Yeah.
And one of the things we talked about before the interview was that Autochartist is a company based in South Africa, and you get paid in dollars. So.
Yeah. Yeah. Right. Okay. So. Yeah, I know where you're going with this. So how do we manage our foreign currency risk?
Yeah, exactly.
Yeah.
You're a company that specializes in it.
Right, okay. That's a good question. Actually, Autochartists is actually pretty good at forecasting the South African rand. Interestingly enough, so we it's different though, because when you manage the currency exposure of a company, it's different to trading speculatively,
sure.
Right? So we wouldn't buy or sell rand or dollars, right? What we would do is we'd take forward cover,
okay,
right? Because our objective there is not to make money on the currency movements, but rather to hedge any possible
people
losses.
Want payroll.
Exactly,
and
I've
pay
got payroll.
rent.
Right, I've got payroll to pay, and people depend on the money. I can't suddenly base my entire company on whether the rand's going up and down. Right, so we definitely use Autochartists extensively. When we decide on how much forward cover to take on our foreign income.
Okay.
Yeah.
And you're still trading today?
Definitely. Me personally, yeah, definitely. I still trade. I still trade the Johannesburg Stock Exchange.
Okay.
I trade FX. I'm new to the US, so I'm not into the US markets completely.
Sure.
But I'm starting to know the companies a little bit. But it's difficult. Getting to know everything, and the US market is really overwhelming.
Yeah, something like 6,000 stocks.
Exactly right. So the Johannesburg Stock Exchange is just a few hundred shares, of which 20 to 40 are actually tradable.
Okay.
Have enough liquidity to trade. So the problem is much smaller, right?
Right.
Whereas the US, it's really a big market, and so I'm still getting into it. That's the honest truth.
Okay. Well, I think that's all I had. So Ilan, thanks for joining me today.
Thanks, Sean. Thank you very much.
Thank you for listening.